Look, I think first of all, these issues around intellectual property, around technology, they've been 10, 100 years in the making. So I know that we all as investors, as stewards of capital, would really like to have this done before March 1st. We at UBS do not think that that's likely. I think that, there seems to be a genuine desire to have progress on both sides. We're not talking about small issues. We're also not even talking about just China and the U.S., right? Now we had some dialogue about auto tariffs, which would affect Germany, would affect Europe, would affect Japan. I think we should all celebrate at the same time the fact that we're hopeful, and it is very likely, that we have passed through in July of NAFTA, which now the relationship between the U.S. and Canada and Mexico is about 5 times the magnitude of the amount of trade that we do with China. So while this is very important, it is likely to be something that continues to plague markets, we think, well into 2020.
All right. David, your point on this is a little bit nuanced. You see the possibility that the U.S. and China will get what you call the easy thing done, that China will take out its checkbook, they will buy more American product, probably agricultural product, and that the tougher things may get punted down the road. The tougher structural issues that bear on how the Chinese economy operates, intellectual property, forced technology transfer. Are the Chinese going to play out the clock on President Trump?
I think they'd be happy to, and I think President Trump may play into that because he would like to have a political win on this topic, especially if the border stuff's not going his way. So I think he may accept a deal that involves China taking out their checkbook. And remember, they have $4 trillion of foreign reserves. They have tremendous control of a large part of their economy, which is still continuing to grow at a very healthy percentage growth rate. So the one thing they do have here is money. And they're more than happy to spend that.
And they've got the advantage of time because Xi is president for life. Trump is president for 2, maybe 4 more years. Who knows?
That's right. They don't have to worry about the midterms or the machinations of Congress and so on and so forth. So the easy thing for them to do is to take out their checkbook and buy more U.S. goods. Now that distracts from having to really address the thorny issues of technology transfer, which we've been talking about. And those are things that China really doesn't want to change. They feel like that's been a very successful strategy for them. It's served them well, helped them bring a lot of people out of poverty, and they think that that's critical for them to have sort of their second leg of growth and automation in manufacturing and so on and so forth. So if they can distract Trump with an easy win, I think they'll take it, and he may go for it.